Very good afternoon, everybody. For a long time, sustainability has been sitting in a slightly uncomfortable corner of business, right? It's important, looks morally correct, looks good in annual reports, but treated as cost, treated as compliance, or as corporate reputation. I think that phase is ending. The real question today is not whether sustainability matters. I think that debate is over. The real question is whether sustainability can make economic sense at scale, create profit pools, create jobs, build new companies. But we have to be a little honest with ourselves. For years, sustainability has been a language that corporate companies have learned to speak very fluently without always changing how they've really operated. So today I want to separate, like I was mentioning to you guys when I met you all, I want to separate the PowerPoint opportunity from the real opportunity. And I'm delighted to share the stage with all four of you all, because all four of you all bring very different perspectives to the table. I'll do a quick round of introduction once again. I've got with me here Abhishek Jain, who is the Director of Green Economy and Impact Innovation, Council of Energy, Environment and Water. I've got Manish Dabkara, who's the Chairman and MD of IKEA Energy Services Limited. I've got Rahul Nainani, who's the Co-founder and CEO of ReCircle. And I've got Sriram Kuchimanchi, who's the founder and CEO of Smarter Dharma, a climate and tech sustainability firm who helps businesses and urban infrastructure in becoming greener. So without further ado, Abhishek, I'll jump to you first. So India clearly can't copy the Western sustainability playbook, right? We've got growth, we've got affordability, jobs, energy, all at the center. So help explain to a layman in the room, what does an Indian model of sustainability look like? One which is not anti-growth, but actually becomes a growth engine.
Yeah, for sure. I think in India, unless it is going to make sense on the bottom line, sustainability is not going to happen.
Yep.
We can't have the narrative of triple bottom line, which was what the West promoted a couple of decades ago. That's not how it works in India. Unless it is making economic sense, sustainability will not happen. But there are a range of factors that you can tweak to make it economically viable. I think that's what the point is. Today, sustainability is being pursued because it is helping you save cost. That's why you see commercial rooftop solar. That's why you see electric vehicles in the commercial space, not in necessarily as much in the individual consumptive use space, but when it comes to delivery vehicles, when it comes to commercial ferry vehicles, you see electric vehicle use because it is making economic sense there. So cost saving is one big reason why sustainability is getting pursued. The second is if it is opening up new revenue segments for you. I think I'll give a quick example of Godrej, not very far from here. 32% of their revenue comes from what Godrej calls good and green businesses. Right? These are businesses which are low emission, refrigerant-based air conditioners. These are businesses where their furniture is of the low environment footprint and so on. So it has opened up new market segments for them, which were earlier not open to them. And the good and green business is growing far more rapidly than their baseline revenue. So if it is helping you tap into new market segments, that is where you'll go.
So again, just to try and sharpen this, so I know CEEW has identified 36 green value chains, but 2 or 3 sectors which, according to you, India can build genuine economic advantage, which is not in terms of reducing emissions, but creating jobs and enterprise value. What would your bets be today, without waiting for policy to catch up?
I would say some of the circularity themes, especially when it comes to critical minerals. It is the talk of the town. India has a huge critical mineral mission. China is trying to square most of it across the globe. So we do need to secure a lot of them. And circularity gives us a great way to ensure a lot of the minerals which are coming into the country remains in the country. You're already seeing companies with billion-dollar valuation emerging in this space, whether it's Atero, whether it is Loham, and so on.
Right.
So circularity in few themes, I would say, is a play where you don't need policy. It is happening because of the intrinsic value that it is generating.
Got it.
Then I would
Sorry, go ahead. Go
The
ahead.
other sector I would say, which is right now we are facing the heat quite actively, is in the fertilizer space. Uh, India have realized that while we have become food secure, we are not actually, because a lot of our fertilizer is still imported, 87% of it. Right? So what is it that we can do in the bio input space to displace a lot of that external input to the local input? Right? So there is a lot of play around biotechnology, but also low technically complex inputs that can actually lead, and that has a strong linkage to the livelihood and the job story. Not everything which is going to create large economic value may lead to large jobs. Let's keep that in mind.
Right.
A lot of the high-tech sectors typically are capital intensive and not labor intensive. So you may have to look at them separately. Yeah.
So Manish, let me bring you in. Abhishek has mentioned that this has to be pro-growth and has to be investable. But from the carbon market side, does India have the architecture to actually turn climate action into real economic value? Because carbon markets sit at the intersection of climate, finance, and trust, but they face serious criticism, right? Double accounting, quality, whether offsets are real. So, what needs to happen for carbon credits to become a trusted mechanism, and not just a corporate escape route?
Yeah, so thank you for having me here. Uh, as you see, the whole carbon market can be divided into two parts. One is the compliance carbon market, wherein the companies need to comply whatever the emission reduction targets that had been given by specific nation like India to have a scheme called as carbon credit trading scheme, which is a compliance scheme wherein around 480 companies had given the target to reduce their emissions, and if they would not be able to do, they need to buy carbon credits again, which is originated within India, not the international credit or the voluntary credits. The second, it works similar to the other different markets like European Union emission trading scheme or Chinese or Korean emission trading scheme. So this is how the one set of stuff wherein the companies are obligated to reduce their emissions. The second pressure is the voluntary in nature, wherein companies who are looking to improve their ESG score, who are looking to make their clean and green image, they used to rely majorly on the voluntary carbon markets, wherein the rates of the carbon credits are quite cheaper as compared to the compliance one. Like if you see in the European Union, EU ETS, European Union Emission Trading Scheme, the price of one carbon credit is around 80 euros, for example. It used to vary, but consider 80 euros. But in case of voluntary markets, it is less than $1. So obviously, people who are looking to improve their clean and green image, they definitely go for the voluntary carbon markets.
So help explain again for an Indian business. What is one common misconception that an Indian business will have about carbon credits? Is it about compliance? Is it cost saving? Or is there real business opportunity?
So actually, if you see, the whole carbon market had got started from since year 2005, and from 2005 until 2025, India had positioned itself as one of the largest seller of carbon credits going to the compliance or voluntary carbon markets. But now, for India, it is very new to become to give the target to the companies to reduce their emissions. India is again one of the third largest emitter, greenhouse gas emitter, and now India is positioning itself to become one of the big buyer as compared to the net seller. So this is how for the Indian corporates shifting from the seller mindset to the obligated, or then further going to the buyer mindset. That is the transition journey which has recently been started. So it is very, very new for all stakeholders within Indian ecosystem.
But again, my question is for the market has had some spectacular sort of credibility issues,
Yes.
right? So for an Indian CFO, why should they trust this segment? And especially, what would you say to an Indian CFO who's already been burnt? Right? Because once bitten, twice shy. So why would they want to sort of come in? And I know it's a tough question to ask. I'm putting you on the spot, but how would you tackle that? If I've invested and I've been bitten, why will I come back in?
So as I mentioned earlier, India was one of the net seller. So for the seller. Again, that is the proposition which need to be considered by the CFO. Like earlier during 2021, 22, 23, they were selling the credits ranging in between $3 to $7 and probably in between $10 to $20. But now it is less than $1. So that is again a very big concern for the sellers. But now, slowly, as I mentioned, the companies are looking very seriously to become net buyer as compared to the net seller. Although many companies who were looking to sell the credits at the higher rates, they have made huge losses, including us. That is the huge setback for our organization, for the sellers originated from India or from the developing nations, and the net speculators or the investors across the globe who had invested into the voluntary carbon market. So that was a very small life cycle which we have seen for almost a few months, you can say. But that is the cycle wherein, like I'm into this industry for last 18 years. And this is the basic nature of our industry. For very short time, we earn very high, and for very long time, we make losses or remain stagnant.
Okay, Rahul, Manish has talked about trust and measurability or the lack thereof. So in waste and circularity, that problem must be even more messy, right? Because the supply chain itself is so fragmented. So if waste is misplaced value, you build a company around recovering that value. So what has to change for India to stop treating waste as a municipal burden and start treating looking at waste as an economic resource?
So thanks, Deepak. I think to start with, one of the biggest differences, so we do a lot of work in plastic credits, majorly compliance-based EPR credits, and some of it voluntary credits, which was coming from buyers in the US. Now, of course, with the whole Trump administration, the voluntary market has drastically shot down. But the major difference between carbon and plastics is that carbon is something that you cannot see. Plastics is a physical commodity.
Yep.
So when we talk about plastic credits, you can actually see material being collected from one place and being moved to another place. So there's a lot more validation, there's a lot more credibility that comes down when you talk about plastic credits to start with itself. Because at the end of it, carbon is something that it vanishes in the air and you're saying that you're claiming it. I'm not saying that all the credits are incorrect, but that's the advantage, slight advantage that we have when we work on the plastic credit system itself. Because when we sell plastic credits, we actually show them traceability of where the material was collected from and where is it actually finally going and getting recycled. So I think that has given us a slight edge in terms of having plastic credits differentiated from carbon credits, because just typically you and me can see the pollution on the ground, and that's what we're eventually able to collect. Coming to the second part of your question, which is essentially how do you see this as a resource? While most of this informal sector has already been capitalizing on this as a resource for decades, it's the formal sector that has actually not taken any kind of load of it, nor has it actually been able to reuse it as a resource. Because in India, there's 80% of the recycling of plastic that today happens through a large informal waste ecosystem, right from waste collectors, your rack pickers, your scrap dealers, recyclers. There's one study which says that just the Dharavi district in Mumbai used to do, when I say used to do because rents have got so expensive there, so that's moved to Nalasopara and outskirts of the city, $1 billion of revenue through the informal market of just scrap aggregation. There's 4 million people that collect waste as a resource across the country, which are completely informal, running in this shadow supply chain of sorts. Now, what we are trying to do is that actually make sure that this gets formalized and gets put into the real supply chains of the polluters that are actually putting this into the market. Making sure that this entire supply chain gets the credit that they deserve, because at the end of it, they are cleaning up our waste and they are managing it, even though it's informal. But if they were not doing this, our situation in terms of waste would be 10 times worse.
Yeah.
And making sure that they get paid the right amount for doing so.
Yeah.
And this inherently, I think, somebody touched upon it earlier, is that circularity as a theme. Now, where we are seeing a large portion of our growth coming along over the next few years is that suddenly when the global supply chains for oil has got disrupted because of this war, Recycling has become more and more lucrative because you're able to actually use your waste within your own country, recycle it, and ensure that it's cheaper than oil, and it acts as a resource then. So slowly and steadily, we are seeing that yes, while initially to set the infrastructure and to ensure that the supply chain is compliant with the norms of what these big companies require is a cost burden, and that's what the credits should technically be able to solve.
So let me push back here a little bit. Maybe I have not understood this. You mentioned a place like Dharavi, billion-dollar business being generated by a sort of a shadow economy. So obviously there is
Value.
you can see value, right? You're also, I researched that India's waste plastic recycling market is expected to double by 25 million tons by 2034. So with that scale of opportunity, why is private capital not flooding and backing entrepreneurs in this business? What's stopping the flood of private capital? Because you're telling me that there is demonstrable opportunity, visible opportunity. Why is private capital not following it? Money always follows where the opportunity is.
So yes, you're right. I think private capital has not been as aggressively put in the sector. If you look at sustainability as a whole, it's carbon, EVs, solar is where the money is actually flowing into, because that's where you see immediate returns. Recycling requires a lot more investments. It's a longer gestation period. So nobody's willing to take that first bet. While having said that, there are large investors that have put in money in this ecosystem. We've been backed by investors like Flipkart Group with Acumen Global Investors that have put money into our business as well. However, it's not at the momentum or at the speed at which an AI industry would get investments. It's not as lucrative. It's not as sexy as a business.
I don't think any sector is getting as much money as the AI sector is.
There you go. So I think that's where the money is not coming in to our sectors like us.
Can I quickly add a data point? You know, last year, how much money went to AI? It was $560 billion. How much money went into energy transition? It was $2.2 trillion. It was 4 times more than AI.
Wow.
That's also the difference between the sentiment in the narrative and the reality of the numbers. Just wanted to add that.
Interesting. Sriram, let me bring you in and save the best for the last, because you can be a critic for all of them, all of the people on the panel. So Rahul was mentioning that, value is lost because maybe systems are badly designed. How much of sustainability do you think is a design problem rather than a morality problem?
I think, and you said disagree, right? So I was going to talk on what Manish and Rahul were talking, which also answers the question you're asking. I think the way we are looking at sustainability is itself flawed. The reason carbon is going to go down, like you said, carbon price. If we look at carbon pricing or even plastic management or waste management with the same lens as I'm looking at building a ChatGPT, or I'm looking at a fintech idea or a healthcare tech idea, the lens has to change with sustainability. The problem is the success metrics are the same, which is why private equity money will
not come.
And it shouldn't also. The truth is, it shouldn't come. Because sustainability is a mess created by other issues. If you take the same lens which succeeded in building those other businesses to solve the mess created by those businesses, you can't solve it. So the lens has to change, the definition of sustainability has to change, morality has to come, but numbers has to play, right? India is a...
So you're basically saying, organizations are treating sustainability as something that is added after the business model has been built. It's a layer of correction almost, if you were to speak. Any example where you've seen sustainability create real business advantage when designed from day one?
I will tell you that, but just to drive home the point on the previous thing, right? An example is granite industry.
Sorry?
Granite industry.
Okay.
Right? Granite industry. Granite mining is very environmentally unfriendly. One of the most environmentally unfriendly thing, all because you want to make a kitchen top and roll rotis on that, right? Which you really don't need to. You can have so many other material. Now, granite industry is supremely financially positive. I mean, they make a lot of money there.
Yes.
The slurry which comes out of granite material can be converted into alternative bricks or other walling material. Now, a granite company should actually work on the slurry and convert into something meaningful rather than create eco-disaster zones, because it should be done. But the granite industry is today looking at, this is a new revenue model. You see, there's a huge difference between that. You're anyway making money, 98% of your money from granite. The 2% of the slurry, which is actually waste generated, do it the right way. Okay, make a break-even business. Do not look at that also giving you a 30%, 50% margin. And that is there in multiple industries. I'm using granite also being an extreme one. Now to answer your other question, which industries are showing? So the good news is, to Rahul's point, we should not use the word waste, you should actually use the word resource. If you start talking it at outcome as a resource of any process, then that material has a second life. That mindset has to come from design all the way to end of life.
Right.
Today's circularity word we use in India loosely, it's essentially glorified waste management. But actually what I mean is a phone, right? The inputs into the phone has to change for circularity to really work. If the inputs are the same, but you want to say it's a circular phone, then you're essentially expanding on your waste management, not improving on design. So success in that now is building industry.
So,
building industry is where
let me follow this up. So for a CEO or a small entrepreneur in the room, give me, in your view, what is the first practical shift that they should make? They should look at a different way of measurement. They should look at a different way of procurement, energy, waste culture, without getting overwhelmed. What is the first thing that you can do?
Without getting overwhelmed, the first thing is sustainability should be part of my business model. Today, it's not part of the business model, right? So, example is, I'll take an example on the fly, Swiggy, right? Somebody like a Swiggy, and I've known them, worked with them. So, if they want to become sustainable, replacing plastic is not going to happen, right? The chemistry of the form factor, if somebody orders a hot paneer butter masala and a poor chap is stuck in the traffic in a biodegradable container, it will break down. There's no point, right? You have to give it in plastic. So in the business, can you work out a model where Deepak is ordering from his house? I can wait there for 2 minutes, take the container back, integrate Dabbawala model into that at the business stage, see that there is a 4 to 5 rupees increase in the cost of making it happen. So they have enough data to say that I know I'm delivering to Deepak's house and Rahul at his office. Rahul at his office, too bad, I can't do anything. But Deepak at his house, I can wait, get the thing converted into a local dabba, your own plate, take the box back so that I can recycle it, hand over to, ReCircle so that it is recycled. If you integrate that kind of business models, and there are umpteen examples of this kind, you can actually see then value out of it, right? Because that way, that 6 rupees, you will be happy to pay. As a consumer, a Swiggy consumer, if you tell them that by 6 rupees extra, you will ensure that you're not generating additional plastic waste. A customer today, Swiggy's customer will be happy.
So let me just actually get all your viewpoints, because I think we sometimes expect the morality to be done by the end consumer. So are Indian consumers actually going to be willing to be paying for sustainability, or do they like the idea until the price tag changes?
So, very good point. I think Indian consumer, by the way, I have no idea on the 6 rupees, nor I want to clarify that. Swiggy can spend, I don't know how much on this, but I like Swiggy guys, they're very open to this idea. I know that much. To your point, India is a kitna deti hai country. If you tell somebody that your 6 rupees or X rupees is going to generate this value, financial and this environmental, hey, go ahead and show off, they would spend. It's not that we don't have money. It's that we don't know what value we'll get out of the money. I always tell my real estate clients that don't assume your customer is unintelligent. They're very smart. If you provide them the right value, information about that per rupee, per dollar, they'll be happy to spend.
So how do you make, let's take a tier 2 manufacturer who's doing about 500 crores worth of business. So he's not small, he's not gigantic as well, but his margins of profit are quite thin. Who typically will see sustainability as a tax on growth rather than a growth driver. How do you make this real for it?
So you're right. We'll always have the situation where a vast majority of the country, on the world, not just India, around the world, sustainability will always look like a cost center, not a profit center. That's because the definition of what is a cost center, profit center is very siloed. Think of it, right? If an EV versus an ICE car, right? EV, I mean, there are other problems there, but let's assume for some time EV is more sustainable than ICE. If you think of it that way, then the price point should not be, you're not comparing apples to apples actually. For
It's
a
a different
consumer,
product.
right? So how can you then say you are going to spend, simple example, people buy iPhones. People take loans and buy an iPhone.
Yes.
So you're willing to spend money because you consume a perceived value out of it. So sustainability needs to project that perceived value. If you do that, people will spend money.
Okay, so let me just open this up now. Which models on the stage, according, and I'll go one by one. Which models on the stage are generally profitable today, without subsidy, without philanthropy coming in, or regulatory compulsions coming in? What models do you think are actually genuinely profitable today? Let's go one by one.
Construction industry is profitable.
Construction.
Definitely, real estate is very profitable. I have case studies, success stories of my own clients. The amount they put in versus what they make. Even in the current definition, I disagree on the definition of profit of current world from sustainability point of view. But even if you take that definition, real estate industry is definitely profitable, becoming sustainable.
Okay.
I would say some green businesses will become sustainable if you remove the subsidy.
Okay.
Yeah, because there is a lot of subsidy going to the grey.
Yeah.
Fertilizer, classic play. India spends $25 billion annually on fertilizer subsidy.
That's a nice way of looking at it. Yeah.
So if you remove that subsidy, a lot of your organic will become profitable.
Okay.
In the present carbon markets, nothing is profitable until the global economy become again stable, especially Europe and US. But if you see from year 2030, the credits which will go to meet NDC goals, National Determined Contribution Goals, or CORSIA credits, the credits which are eligible to qualify those requirements or whosoever will do invest into those specific categories are going to be super profitable, along with the projects which do create removal credits.
We're running out of
removal
time.
of
Let's
carbon
just move.
dioxide.
I have one more question to ask.
So I think I believe that most sustainability businesses that have sustainability at the core of the business offering and not as an add-on layer, at scale will all be profitable. And the example over there to give is that if you put in the same amount of money that you're putting into food delivery and in terms of tech or in terms of AI into sustainability businesses, allowing them to burn and build that infrastructure for the first 3, 4, 5 years, you will see that all of these businesses at scale will make sense and in fact will start growing much faster.
Okay. So basically you are wanting the burn model of...
I don't think that's the burn model. It's about getting to scale.
Okay. Yeah. So let me then try and sum this up. If a 25-year-old founder in India said, I want to build a circularity business or a climate or a circularity business, let's assume, what will each of you tell them to avoid? What is the graveyard of circularity businesses in India?
So I think don't rely on subsidy and policy. It could be a good entry point for you to get into. So if there's compliance requirement for brands to do so, it's a good entry point to get into. Make sure that you get your grounding in place over there and then build a business that can actually survive without the subsidy or the grants.
What about you?
The credits which are coming from the compliance regime or compliance demand are more sustainable as compared to the voluntary one.
Okay. Abhishek?
Don't pursue green as a virtue, pursue green as a value. And don't be clear when you are raising money, what are you raising it for, and hence which kind of capital. Don't get into the equity game if you need rather debt. A lot of green businesses are very capex heavy businesses. You're building hard infrastructure. It's not a consumer tech play. And equity is not a great capital if you are becoming an asset heavy business.
Got it. Yep.
I don't look at one stakeholder in the ecosystem you're working with and trying to provide value just for one, because the ownership of sustainability is all the stakeholders.
Right.
And so if you are able to create your business around multi-value, is when you'll actually work out one single value, nobody. And I'll just one line addition. If you look at it today, none of the sustainability companies are a must-have in the world. We're all a good to have. So for us to become a must-have, it should be multi-level value for all the stakeholders. That's what many of us miss out, which is why we struggle.
Okay, we're badly out of time, but one final question to all of you all. Just because we want it to be actionable, so if there's one specific actionable thing that a company should do in the next 90 days, which is, you don't have to plan too much for it. which is not a philosophy, one specific actionable thing that you think a company can do very quickly, which is in 3 months' time or 1 quarter's time, what could it be?
Any size business should set sustainability goals in line with their business. We miss that. Nobody has enough goals. Set goals, drive your business. You're smart enough, you started a business, you're smart enough to drive even sustainability, but set goals in line with your business model, not outside of your business model.
Got it. Abhishek?
If you're already a green business, look at other green businesses in your category, not as competitor, because your actual competitor are the grey businesses. And many a times, these small street fights lead to that battle getting lost. So come together. If you're not a green business, then look at how much of revenue can come from green as a revenue growth strategy.
Yeah,
So,
got it. Manish?
Crystal clear formation of the low carbon pathways for the organization, but because maybe since we are in developing nation, the sustainability or low carbon pathway is not the exactly need of the hour, but as we move towards year 2050, 2040, 2050, more and more businesses definitely will do see that the having low carbon pathways importance and implementation of the same is going to be very critical to remain in the business.
Got it.
I think audit your supply chains with these global issues that are going in supply chains to see where you can start bringing in local and sustainable solutions to actually make sure that you don't see these same shocks coming in over the next few decades.
Yep. Okay. Okay. I think sustainability, if I was to just sum up what my distinguished panel has said, I think it was adolescent, but I think it's grown up. But it's clear that it can no longer survive on just glossy reports and photographs of people planting saplings, right? I think that era is gone. In the future, I think belongs to companies who try and at least do 3 things at once, which is solve an environmental problem, depending on the ecosystem that your company is a part of, make the economics work, because without that, there is no business, and then prove the impact honestly. I think for India, that is the opportunity. We don't have to choose between growth and responsibility. If we get this right, responsibility itself can be a growth driver. So maybe the profit in the planet, which is the topic of this panel, is we've got to look at profit a little differently. Maybe profit is not just financial profit. It is the profit of building a future where the business does not have to apologize to its consumers or to the audience for growing, because it's growing in the right direction. Thank you, gentlemen. Thank you. Thank you so much. Really enjoyed this.
Thank you very much.
Thank you.